Hey, we're going to get rolling here this week, and one thing I do is want to answer a question I had is that someone asked me, what am I looking down at sometimes? And I have to admit, I don't know all the numbers right off the top of my head, so I do work off some notes in here in front of you. That's why I can't stare at the camera the entire time. So getting that question off the board here, let's move on. One chart I want to get in front of us here is between a 22 and 23 corn crop. We're buying D's 22 corn, selling D's 23. As you can see on the far right in here, that spread has had a good spark up after we had that acreage report last week. Okay, and if you want to be positive on corn and say the focus has got to be on new crop 22, this spread should continue to gain in here right now. A year ago, the spread between 21 and 22 corn peaked out at $1.10. And so if you're going to look for an upside target on the spread, we would say that $1.10 would be an area. Just a caution though, last September when we moved into harvest in here, the 21-22 corn spread did narrow up to even money in here right now. But in the near term, if you're positive, look towards the spread. On the negative side, though, we're looking more towards the old crop July corn to new crop corn. And as you can see, the spread has been working its way lower. The reason why, and he had the big spike down in here after the report, is there's really not the threat of running out of old crop corn. All the uncertainty is on new crop. And so what we're doing is seeing speculators liquidating out of the May contract, maybe the July, and then if they're putting their bullish bets, they're getting out towards a new crop December corn contract. We want to bring this one in front of us here, and you probably haven't seen this chart before. This is a spread chart of Brazilian cash corn, and what we're doing is looking at July 22 compared to November 22. There's not a December contract, but what's odd here is that you have some carry in the corn market in Brazil. They're saying, hey, we're willing to pay you more in November, okay, than what we are in July for the corn. That's the exact opposite of what's going on in here in the U.S. In the U.S., our market is inverted. The Chinese corn futures market is similar to this as in Brazil, where there's a slight carry in that as well. This is why we think, if you look back on the last chart in here right now, we really see that July D's corn spread narrowing up to even money. We want to bring this next slide in front of us here. Is on top, we've got new crop December 22 corn futures. And as you can see, since November, we've been on a steep uptrend, just trading above $7 a bushel in here today. The bottom chart, though, is November 22 Brazilian corn. And we had a good uptrend in that market. And then it peaked out in here about the 1st of March and has trended lower here recently as they have had improved weather. Where we are concerned with this look right now is that if we flash back to 2019 when we had the major crop issues here in the U.S., yet the market traded lower, it went lower because the South America corn crop let us down. As we look towards the bottom here on this Brazilian corn chart, it's in reals per kilogram. If you at $100 or 100 reals, that's equivalent to around $9.31 a bushel. At 90 reals, that's about $8.38 a bushel. So this move from 100 down to 90, that's a little more than a 90-cent drop, okay, and Brazilian corn market. As we switch over to beans here quick, here's a July-November bean spread. We think just like corn, this spread has got to weaken up in here right now. Okay, we just don't see the risk of running out of old crop beans, and every end user that can stretch old crop supplies to new crop is going to try to do this. The bean spread hasn't broke like corn recently, but we think the high is in place on this bean spread. As we want to wrap up today in here, we need to watch spreads. If you're bearish, maybe sell old crop and buy new. If you're really bullish the market, buy 22, saying we got uncertainty compared to the 23 crop. We think it's really important to watch the world markets in here. Again, we flash back to 2019. It was a South America crop that led us lower in here, not all the issues in the U.S. holding prices up. As we move into Friday's supply demand report, and we'll update our webinar. And again, a lot of the focus is going to be on world production. As we got past this March planting intentions report, it's about weather in here right now as we move ahead. Not much planting is going on right now, but it is too early to start trading planting delays here or really even think weather in the U.S. One last thing, when we start looking at price protection, we've talked about forward contracting as being a focus. Look at options, consider hedges on the board. The one thing we just have to encourage you to stay away from is any sort of gimmick market program that's offered by country elevators out there. These are good enough values in here. If you want this price, sell the cash ahead. If you want a floor in place, buy a put. We think when there's good times in here right now, the best thing for you to do is keep it really simple on your marketing plans. Any questions or insight in here, give us a call. Also, please like our YouTube page in here right now. Again, we like getting questions and more than happy to answer them. Have a great day.